We have seen that capital plus liabilities, capital meaning the owner's equity, liabilities here meaning outsider's liability, outside liability is equal to assets. So, another way of writing this is the capital is nothing but assets less liabilities. This is what you have said, or assets less liabilities means it is called as net assets. So, capital is always equal to net assets. So, when you take the total of all assets, remove the outside liabilities from it, what remains is capital. So, net assets is capital. So, what was the net asset at the beginning of the day when Ram started business? It was 2,50,000 minus no outside liability. He did not take any loan. So, it was 2,50,000. After at the end of the day when he sold the spices and herbs, he had a asset figure of 2,75,000 which we just saw, and his outside liability remains 0. So, it became 275. So, what has happened now? Net assets have increased by 25,000 rupees, which is the amount of retained earnings. So, the way the profit retained in the business changes is looking at how the net assets of the company or the business has changed. As the net assets go on increasing, it essentially means that the profits that the company or the business is making is getting added to the capital. Now, that is the basic. Unless and until new capital comes in, this essential increase in the net assets happens because of profit being moved back into the business. I hope this concept is clear. Let us move on and look at this a little more further. We had assumed that Ram has put all the money back into the business, right? That was the case. Then we saw what picture was that retained profit was 25,000. Now, assume Ram wants for his personal use something like 18,000 rupees. It is also called Ram drawing from his business 18,000 rupees from the 25,000 rupees profit he had made. This drawing or this taking of money away by the owner is not treated as though he is taking a salary. In a sole proprietorship and a partnership kind of scenario, these are not taken as salaries that are paid, but as a appropriation of profit. That means from the profit the amount has been taken away. So, let us look at this. What is not right to do is take the profit on sale, then say that Ram's 18,000 rupees of drawing is as though it is salary or wage, and then arriving at net profit. Now, that is a wrong way of looking at it. The right way is to say profit earned is 25,000, out of which Ram has taken 18,000, and the amount that has been retained in the business is 7,000. So, once this happens, what is the situation? How does the accounting equation now look? We have seen that out of this 95,000 bank balance and cash balance that was there, 18,000 has been taken away by Ram, and therefore, what remains as retained profit is only 7,000. So, the asset and liability total, which was 275,000 that time or 2,75,000, now stands reduced because 18,000 has been taken away from the business. Again, we can do the net assets calculation. The net assets is 257 minus 0, which is 257, which is the capital amount also now when you add these two. And what was the increase in net assets now? Now it is 257, originally it was 50 is rupees. So, the change in net assets at the beginning and the end has given you the amount of retained profits, which means unless a new capital has been put in, the change in net assets will generally reflect the amount of profits that has been put back, plowed back into the business. Okay. I want to now introduce a new concept also. We have seen the related the retained earnings to net assets. There is another concept called the business equation. That is, if I need to find out how much profit was made during the year, I can take the increase in net assets plus the drawings, the money that Ram, for example, took away for his personal use. Then if there is any capital, that additional money that he has put in, we can remove that, that figure will give me the, so for example, in our example the profit is nothing but 7,000, which is the change in net assets, which is nothing but the retained profit, change in net assets, plus the drawings of 18,000. There is no new capital introduced since there was no new money put in, that remains 0. So, in the profit during the year then works out to 25,000 rupees. As I said, since the change in net asset is a reflection of the change of total assets less the liabilities, the outside liabilities, that reflection will be here. Now, suppose new capital was introduced, suppose we had introduced 10,000 rupees as capital. I will take an example later and explain, but just for the sake of clarity why we need to reduce capital introduced. Suppose 10,000 rupees was put in by Ram. Now, what would have happened? 10,000 rupees would have come in as capital. Obviously, it would have reflected as an asset in the asset side as cash balance. So, the asset would have gone up by 10,000, but the liability, there is no additional outside liability. Liability would have remained the same. So, this figure then would have looked like 35,000, which is wrong, which is not the case. So, we need to remove that 10,000 rupees and then arrive at 25,000 rupees. We will see an example down the line which will clarify this better. So, business equation is nothing but increase in net assets, ending net asset less beginning net asset will be increase in net asset plus drawings which the owner has taken out less any new capital the owner has put in, will give you actually what is the profit for the period. So, we again progress with Ram's business. Ram was unwell, so he requested his friend Manoj to help him and told him that let him look after the stall for the day and he will give him a salary or a wage of 4,000 rupees. What happened during the day was spices bought for 74,000. As I said, please note down these figures because you will be able to relate it later as we go on. Spices bought for 74,000 were sold for 1,10,000 rupees, and at the end of the day Ram paid Manoj his wages of 4,000 rupees and also took a 20,000 rupee drawing for himself. So, now we will see with these transactions how did the accounting equation change. Now, what has happened? First part was he bought herbs and spices of 74,000. We only take that part now. So, once he buys, cash from the bank has now moved over to the stock which he has got of his herbs and spices. So, overall nothing has changed, the total size remains the same of 257,000. Now, let us factor in what happens when the sale of this stock happens for 110,000 rupees. When this happens, the profit from the sale is minus the cost price of the herbs minus what he has to pay Manoj as wages. After that, the profit is 32,000 rupees. From this 32,000 rupees, he has taken out a drawing for personal use of 20,000 rupees. So, what will happen? Cash balance will increase with this amount of sales. It will also it will decrease with the amount that has been paid to Manoj as wages. The profit which would have been 32,000 would also now look lesser because the amount of 20,000 has been taken away. So, bank balance will again go down by 20,000 and the balance remaining out of that will go as retained profit. Let us see that. So, what happened? The whole stock has been sold. So, the balance is 0. What was sold at 110,000 has added to the cash balance here. But what has happened also simultaneously, 4,000 rupees has been paid as wages and Ram has drawn 20,000 rupees for his personal use. So, the net cash balance after all this is 89,000 rupees and the profit out of 32,000 rupees he took 20,000 off. So, what is retained now is 12,000. So, initially the retained was 7 plus 20, 12,000 now. So, the situation is that assets are still equal to liabilities after adjusting for all the transactions. So, you see the dual effect that the asset and liabilities in the business still remain same after the transaction here. Let's complicate this a little more. After this, okay, before that we look at the ending net assets minus beginning net assets, which is 12,000, which is nothing but your retained profit. And the business equation now tells us that from just looking at this we can say 12,000 was the change in net asset, which is what we got here. Drawings were 20,000 and there was no additional capital. So, the profit for the period given by the business equation also is 32,000 rupees. Having said this, as I said before, let us kind of complicate this with a little more transactions, and for that I need to explain to you a few of the terminologies. A creditor, basically you know that whomever you are liable to pay a certain amount of money because you have taken a loan or some other thing is called a creditor. In business, a trade creditor basically is a person or a firm with whom you are dealing and buying goods from them, and normally there could be terms that you can pay after 30 days or 45 days. Now, till then he is recognized in your business as a person to whom or a firm to whom which you have money due to be paid. Now, that person, that firm is called a trade creditor, because, and therefore a trade creditor is naturally a liability to the business. There is an amount that is due. Similarly, while selling, you might as a business give credit period to the person who is buying goods from you to pay you after 30 or 45 days. Now, such a firm or a person is called as a trade debtor. Now, what happens to this trade debtor after 30 days or 45 days? When he pays the amount, it goes into your bank balance or cash balance. So, the debtor is just one step away from bank or cash, and therefore, the debtor is a asset. So, a creditor to whom you have to pay as a business is a liability to you, because you have to, at some point in time you have an obligation to pay. Similarly, a debtor who has to pay you, he is your customer who has to pay you, he is an asset to you because he has to pay you the amount and you have a right to receive that amount, which in turn will become a cash in hand or a bank balance. So, having understood this, now let us add a few more transactions to Ram's business.